right, everybody, welcome to Money Chat Now. I'm your host, Larry Steinhouse, and today is September 20th, 2021. Hey, I just want to remind you all, if you like the show, hit that share button, hit the like button, and let me know you're enjoying the show by leaving comments and getting involved. So feel free to leave comments. You can leave them across any platform. I get to see them all. Of course, don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Money Chat Now is brought to you by Investor Schooling. You can attend a complimentary class this Thursday by going to investorschooling.com. You will learn about real estate investing, you'll learn about stock options trading, and you'll learn from those who are doing it every day. On today's show, we're going to be discussing the market update. We're going to be talking about what made the market drop today. We're going to be talking about Biden easing travel restrictions. We're going to be talking about China clamping down on capitalism. Coinbase drops their interest product, raising the U.S. debt limits, and good plays for tomorrow. You definitely want to watch this show because there's going to be some good stuff coming up during this week if you pay attention. All right, let's talk about what happened today. First of all, oh, man. Whew. The Dow Jones hit a point today where it went down as low as 970 points. That was 2.4%. And honestly, that was the biggest one-day drop since October 28th, 2020. The S&P at one point fell 2.4%, on pace for its worst performance since May 12th. And the NASDAQ dropped 2.9% at one point below 200 points down. It finished off pretty well. It didn't finish off well. It finished off better than it was. The Dow was only down 615 points. I like it when I say only down 650 points. That's bad, but when you consider that it was down 970 points at one point today, 615 isn't so bad. In fact, the futures this morning, if you remember, the futures were down about 400, almost 500 points before the market opened, and then we hit a little bit of a frenzy. We came back to about 400, and then we went down to the point where it was really getting scary again, and it came back. The fact that it came back is good news for tomorrow. The S&P also finished down 75 points, and the NASDAQ finished down 330 points. I'm more concerned about the NASDAQ than I am about the Dow, but still not so bad. So let's talk a little bit about what made the market drop today. Well, it all started in China. Yes, anything China made causes problems over here, as we already know. Don't you have a Chinese dishwasher? Doesn't it break all the time? Oh, wait, that's a different topic. All right, so basically what happened, there was fears of the real estate market crashing, and it pulled down several Chinese stocks. So basically what's happening is the real estate market in China is just about to tank, and there are fears of it. Now look, I agree that the market here might actually tank soon too, but not for a little while. I think we got a good 2 years before that happens. However, just be aware that when it happens in China, it's going to happen here and everywhere else soon. The first country that it starts at doesn't really matter. It just starts to go down. So the Hang Seng Index dropped 3.3% to close at 23,000, and shares of China's Evergrande Group in the city plummeted 10.24% after falling as much as 17% earlier. This is important, and we're going to get into why. The retreat came amid concerns over property developer China Evergrande Group. Market participants increasingly believe that Beijing will let Evergrande fall and inflict losses on the shareholders and bondholders. So this is a huge group. It reminds you of Lehman Brothers. It's a huge group, and it's really in bad shape. If you look it up, the stock's at 2 now. It's really, really bad. And they're saying that they're going to let it fall. They're not going to rescue it, just like we didn't rescue Lehman Brothers, which we probably should have, but that's a different issue. The company's debt burden is the biggest for any publicly traded real estate management or development company in the world. In the world. So this is the largest company, real estate owning company in the world, and they're going to let it fall. That could be pretty bad because you got to remember there are debt holders. You got to remember there are stockholders. There are people who these companies, you know, they're projects that these companies have funded. So this could be pretty bad for a world economy and real estate. Of course, you know, that it'll be water under the bridge eventually, but at the beginning it's going to be really rough. So let's talk a little bit else about what's happening and why the market tanked today. The September jitters are also among us, and that's causing fear and widespread selling. Don't forget, you get a lot of stop-loss selling and other automated selling, and that's probably why it went from about 700 down to about 950 down at a point where it just went really, really fast. So that pretty much happens. You know, the fear that Evergrande is going to lead to a Lehman moment is causing financial shocks. If you remember, Lehman in 2008, again, we talked about this before, Lehman in 2008 caused the beginning of the nightmares that caused 2008 to become the big drop that we had then. So I'm going to tell you that, in my opinion, it's coming, but it ain't there yet. A major change is definitely on its way. There's no doubt in my mind. This country has seen markets rising for an incredibly long time, and we're due for a correction or even a major decline. I'm going to tell you to watch for it, but this is not it yet. It's going to come, but it's not here yet. So don't think that we're here yet. Don't think this is the end. So let's talk a little bit about some of the good news in this. Some analysts say that they don't expect Evergrande's financial woes to trickle into other parts of the world, and that the stock market sell-off would be short-lived. JP Morgan analysts said in a note on Monday that the market sell-off was exacerbated by technical factors such as options hedging as well as poor liquidity. They consider Monday's sell-off a overreaction, and I will call it a buying opportunity, and we're going to get to that at the end of the show. It's definitely a buying opportunity. All right, let's talk real quick about Biden is easing travel restrictions. Yes, that's right. The Supreme Leader is allowing people to come into the United States again. The U.S. will ease travel restrictions for international visitors who are vaccinated against COVID-19 in November, the White House said Monday. So they still have to wait till November, right? Yeah. Non-citizens visiting the United States will have to show proof of vaccination and a negative COVID test taken within 3 days of departure, because we all know that the vaccine doesn't work. So, of course, they have to take a COVID test, because if the vaccine worked, they wouldn't be able to get COVID. But, hey, that's a different issue. The changes will take effect early November, which the airline industry expects will spur holiday bookings. American Airlines, Delta Airlines, and United Airlines shares rose after the White House announced an end to the travel bans, escaping a broader market sell-off by early afternoon. Delta and United were down slightly, but less than the S&P 500, 2.4% drop. American stock was up 1%. Actually, it closed pretty well. These carriers have the most international service of U.S. airlines and will benefit the most from the change in policy. So I keep telling you guys, get into American Airlines. Get into American Airlines. It's a great play. Anyway, when the Supreme Leader decided to finally lift the useless mask mandate, when the Supreme Leader finally decides to lift the useless mask mandate, airline stocks will roar. So why do we have this fear-mongering idiots continuing to control us? Well, you know, that's another story. The good news is, again, the airline stocks are poised for a good play. If you have them, hold them. If not, go ahead and buy some more. You're going to be very, very happy about this. I know my stocks went up today, and I was pretty excited about it. All right, we're going to take a quick break, and then we're going to talk about China and what's going on over there.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and today we've been discussing what made the market drop today. We've been talking about Biden easing travel restrictions and how the airline stocks profited from that, and you will too if you continue to play them. I think it's a great play. And now we're going to talk a little bit about China clamping down on capitalism. It's almost like synonymous, but okay. According to the Wall Street Journal, Xi Jinping's campaign against private enterprise is increasingly clear. It's far more ambitious than meets the eye. The Chinese president is not just trying to rein in a few big techs and other companies and show who's boss in China. He's literally trying to roll back China's decades-long evolution toward Western-style capitalism and put the country on a different path entirely. You got to hear this, okay? For most of the 40 years after Deng Xiaoping first unleashed economic reforms in China, the Communist Party leaders gave up market forces wider room to flourish. That opening helped lift hundreds of millions of people out of poverty and created trillions of dollars in wealth. But it also led to, oh my goodness, rampant corruption and eroded the ideological basis for continued communist rule. So basically, they're saying, well, people are not in poverty anymore, and we're helping people get rich, so we need to stop it. You have to go back in poverty. How can you listen to us if you're not in poverty? Oh my gosh. Mr. Xi's opinion private capital now has been allowed to run amok, menacing the party's legitimacy. Yeah, okay. Officials familiar with his priorities say, by the way, the Wall Street Journal examination shows he's trying to forcefully get China back to the vision of Mao Zedong, who saw capitalism as a transitory phase on the road to, of course, socialism. The government's recent measures to tame housing are worsening in the cash crunch of China's Evergrande Group, as we talked before, a heavily indebted real estate developer sending chills across global markets. Beijing is unlikely to bail out Evergrande the way it has rescued many state firms, analysts says, and could further tighten the regulatory screws on other private developers. Mr. Xi has signaled plans to go much further. During a leadership meeting in August, he emphasized a goal of common prosperity, which calls for a more equal distribution of wealth. Or actually, what it really is, guys, it's not an equal distribution of wealth, it's an equal distribution of poverty, because clearly doing what they did before to ease it up created wealth. This is now going to create poverty, which every communist society does. This would be achieved in part through more government intervention in the economy and more steps to get the rich to share the fruits of their success. Welcome the new economy of China. Wealth is being wiped out and the leaders are profiting from it. This is communism, folks. The only people who make the laws are allowed to prosper and get wealthy. Watch for it, because it's going to come to the great nation this used to be as well. At this point, to be honest with you, it's time to dump all Chinese stocks and don't look back. I sold my last remnants of BABA today and I'm done with it. And here's something else that you should ponder. Early this year, this is amazing, early this year when Facebook and Twitter took down President Donald Trump's accounts, Chinese President Xi saw yet another sign of America's economic system was flawed. It led to big businesses dictating what a political leader should do or say. We have a communist, no seriously, we have a communist saying that what Facebook and Twitter did was wrong. Wow. That says enough, right? It's unbelievable. All right, this is definitely a strange world we're living in. And yeah, okay. Let's go over to Coinbase and talk a little bit about the interest product that they tried to create. So basically, Coinbase was trying to create a product that would give you interest. So they basically said, hey, listen, give us money and we'll lend it out to other people, just like a bank would do, but they was going to be a little bit open. They were going to do it through what's called a stable coin. And the stablecoin would have a certain value, and they could lend that stablecoin out to somebody, so they could give you a certain amount of interest. So maybe they'd charge 10% interest to somebody they were lending the money to, and they were giving you 4% interest. Interesting idea. I liked it. It sounded like it had some credence. However, they decided to halt its plans to launch the interest-earning product 2 weeks after CEO Brian Armstrong took the SEC to task on Twitter for its lack of guidance in the matter. So basically, the CEO of Coinbase called out the SEC on Twitter, and that's not a very smart thing to do, because this guy's very powerful, and he says, hey, ha 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 ha, you want to insult me, go right ahead, but we're gonna ruin your life. The newly public cryptocurrency services company said in an update on its blog Friday that it will not launch the Coinbase Lend, which would allow users to earn 4% annual interest on the stablecoin USDC by allowing Coinbase to lend those funds to verified borrowers. Coinbase has also discontinued its wallet for the product. Coinbase fell, of course, more than 5% on Monday. The stock, which tends to follow cryptocurrency prices since its revenue is so closely tied to trading, has also been racked by the broader crypto market sell-off, and the price of Bitcoin sold as much as 10%, fell as much as 10% on Monday. I got to tell you, I think Coinbase is an awesome play right now. But right now, we're going to take a quick commercial. I'm going to talk to you about how you can get a car. Would you like a BMW Z4? Find out how right here.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and so far today we've been talking a little bit about what made the market drop today. We talked about Biden easing travel restrictions for the vaccinated. So if you're vaccinated, you're allowed to travel. If you're not vaccinated, you're not allowed to travel. So make sure you get vaccinated so you can travel, because the Supreme Leader said so. We talked about China clamping down on capitalism. I just find that odd, because that's exactly what they are. We also talked about the fact that Coinbase dropped their interest product, and we're going to talk a little bit about the fact that the United States is going to raise their debt limits. So Democrat leaders said Monday that they would attach a suspension of the debt limit through December 2022 to a short-term spending bill the House is expected to vote on this week. So let me explain this to you. This is very simple. They are now allowed to, between now and the end of December, they are allowed to spend as much money as they want and go into as much debt as they want. So basically, what they've been given is they've been given a credit card that has an unlimited limit. So it used to have, maybe your credit card used to have a $10,000 limit. Now it has an unlimited limit. You can get whatever you want, buy whatever you want, spend whatever you want, and you have no restrictions on what you can spend it on, as long as it's, something that they want, whatever. It's unlimited credit card. That's freaking beautiful. Oh, and you probably never have to pay it back. The decision does little to resolve the deep partisan fight over how, when lawmakers will act to prevent the federal government from running out of cash. So basically, they're saying we're going to go into debt, but we might actually run out of cash. Yeah, okay. Addressing the debt limit is about meeting the obligations of the government has already made, like the bipartisan emergency COVID relief legislation from December, as well as vital payments to Social Security recipients and veterans, the Democrat leader said in a joint statement. So first of all, I thought Social Security was supposed to be in a separate account. Clearly that's not happening anymore, and clearly that's not the way it's supposed to be. But it is what it is. They're going to do what they want, and it's okay with me if they want to raise the debt limit, as long as they never stop raising it. As long as they say that they can buy whatever they want for whatever they want forever, and we don't have to pay it back. The House is expected to vote later this week on the measure extending the government's funding until early December and suspending the debt limit. The government's current funding expires on October 1st. All right, listen. You want to learn how you can get unlimited credit? We're going to teach you how to do that as well. So the unlimited credit available to you comes from credit cards, and we're going to teach you that at Investor Schooling. All right, let's talk a little bit about what's going to go on this week and the wrap-up and how you're going to make some money. So first of all, today I'm going to tell you it brings many opportunities. Today was a great day if you know how to look at it. I'm telling you right now, I'm a buyer at Apple at this price of about 142. Twitter remains a great play. Facebook, I'd like to see below 350. However, I think if you have a short-term call ending this week, it could turn out very promising. Coin and Robinhood may be the play shortly with crypto moving down again. Remember, every time crypto moves down, coin moves down, and it doesn't make any sense because coin makes money no matter what. They make money going up or down. So why do they go down? I don't care, but it's a buying opportunity. So coin is definitely a buying opportunity. The only problem with coin, the options are very expensive. By the way, I have to tell you about Hood. I noticed today that the options are barely traded, which is kind of bizarre. I would think that they were being traded well, but they're being traded. Of course, CCL, RCL, and all the airlines are still at the top of my list. I want to thank you again for watching Money Chat Now. Hit that share button. Hit that like button. Come on, tell me you like it. Tell me you had some fun watching the show. Don't forget to like the Money Chat Now page on Facebook, and don't forget to subscribe to the YouTube channel. I want to remind you that from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show is solely mine, and no one has asked me to discuss them. Thank you again for watching Money Chat Now, and we look forward to your continued support. We will see you tomorrow at 4:03.